What's up, YouTube? It's Joe Catchpollia sitting on the couch making some money investing in fractional real estate online, as usual. Today I'm going to give you an update on my April performance on ARK7. First, I'll go through just a little bit of the info that they provided for their total portfolio, and then I'll jump into my portfolio on there, share how I'm doing compared to their average, which, spoiler alert, crushing it, and beyond that, just going to point out a couple of things that I noticed that I thought was a little bit interesting. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online, ARK7 being one of those. Please do your own due diligence on any of the platforms that I link to and any of the properties that I mention. Just because I invest in something doesn't mean that you should. You always want to just be digging in, figuring out, is that a platform that the risks and associated returns are right for you? Also in the description of this video, there's a link to a Discord channel I have set up. We've got over 270 people in there now. Just talking about all different fractional real estate investing platforms, people sharing ideas, sharing their due diligence strategies, opinions on different platforms. The goal is just to create a community of people who are, helping each other, making this fractional real estate investing a little bit easier by, sharing notes, maybe sometimes approaching platforms in sort of a unified way. But anyway, that's all. Please feel free to join that. There is no cost. It's not a sales funnel. I will not DM you and ask you for money ever. If you get someone that looks like me that is DMing you, that's an imposter. Please report them. There have been a few reports of that going on. Okay, so back into this. ARK7. How did they do in April? They mentioned 4.37% annualized dividend return. Then they mentioned their big winners, right? Atlanta C10, DFW S19, Urbana S11. And those are all, 7% yielders. This is one of the things, when I compare ARK7 to, when I compare to different platforms, like Mogul comes to mind a lot because that's one where I talk about the most. I've been disappointed with Mogul sort of dropping off as far as like their average yields go. But if you look at their top yielding properties compared to ARK7's, I mean, they're not even close, right? Like we have some where where my average yield has been over 12% since I bought the properties. Here, though, several in the sevens. It's not terrible. It's much better than like if you look at Arrived. I don't know if they have any that are in the sevens, right? And so one of the things, trying to more and more think about that as I'm, I am trying to experiment with all the platforms, invest across as many as I can. Whenever I find deals that I think, okay, that's meets my minimum criteria, like I'm willing to invest in that. And sometimes I'm even you've seen me do some videos where I've just put some money onto a platform just to test it, really not even understanding, is this going to be a deal that makes sense for me? But a couple of things to keep in mind. It's not always apples to apples comparison. So for example, this platform, I think all the properties are all cash. Maybe some of them have to actually, I guess some of them do have debt, but when you're talking about a all cash yield versus a levered yield, it's different. We're talking about, pad splits versus STRs versus, long-term rentals. It's all, different risk profiles. But in general, across their whole portfolio, 4.37 return, it's just, I'm not very impressed by that. Like, I've been disappointed with my Mogul performance across my whole portfolio, which is over 6%. And if I took out my STRs, then it would be somewhere around 10%, right? So I figured out, okay, they're terrible at STRs, at least for now. So I've stopped investing in those. Now you could do the same thing here, right? And say, okay, well, ARK7 has good short-term rentals, and relatively speaking, right? And so they have multiples. Well, not all of these are short-term rentals, but they do have multiples that are in the 7%. I'll jump into those. They're talking about their short-term rental properties, all yielding over 6%. Atlanta C10, Atlanta C5, Atlanta C7. I own Atlanta C9 and Atlanta C8. They don't make this list, but at the price that I bought them, they're also over 7%. Let's see, what else are they talking about here? So they always tell you, okay, what's the total dividends that they distributed? I don't know that this is really an important number, but one of the things as these platforms grow or don't grow, right? We've seen some of them slow tremendously. It's important to understand, like, okay, how much money is actually moving through this company? Like, is it one of the things that I worry about with a lot of these platforms is, are they going to survive, right? I'm sure, and I actually know this from talking to some insiders and some different companies, not ARK7, but I know most of them had very lofty, not lofty the company, but just lofty goals as far as how fast they were going to grow, how large of a portfolio they were going to have. And their models, some of their models were built on the assumption that they were going to get to a certain scale in a certain time frame. And so some of these that have their growth is slowed, or they just have very small portfolios. Like, I mean, I in my day job as a real estate agent who only works with investors here in San Antonio, I have clients who have bigger portfolios than every single property on ARK7 combined, right? Like, their personal portfolio is larger than the total investment across this platform. And so it's not, it's pretty small when you think about it in the grand scheme of real estate. And it makes me wonder, like, okay, how much bigger do they have to get before they actually make sense as a going concern? And I'm going to, as I talk about my portfolio and a couple other things, it's going to make more sense why I'm worried about that. But anyway, looking at what that, their total dividends distributed, it's kind of important from that standpoint, right? Like, until this number gets sufficiently large, it's going to make me think they're not really moving enough money. They don't have enough of a scale that I'm going to be confident they're going to exist for a long period of time. You can see their dividend trends. So it does seem like it's moving in the right direction. They've had some dips, but overall, more and more money, or at least more money now than 12 months ago. Their dividend yields, it actually seems like it's moved up a little bit, although still, staying in this below 5% range. And then their best performing property yield, I think it's funny they always throw that in there, but that stayed, I guess it's gone higher, but it's right around 7.5%. This is one of the things I always like to see, that when they talk about, though, their the occupancy rate across the portfolio, 93.59. I mean, that's a strong occupancy rate. This is why whenever we're doing underwriting and people are talking, they have like a vacancy collection loss that's less than 5%. I'm always like, oh, that's way too small. And even 5% often seems too small. I mean, if you look, okay, they should be using 6.5% for theirs, right? I mean, that's their average across their portfolio, at least right now. And if they had done their estimates with a higher occupancy rate than that, then we'd be, falling short of projected returns. A couple of new leases signed, and then they talk about, okay, hey, these short-term rentals are doing well. And really, again, if you looked at the ones, relative to the prices that they're trading now, C8 and C9 are actually doing pretty well too, even though relative to their initial IPO, they're not doing as well. A couple of lease renewals. Let's see, and that's pretty much. Oh yeah, and this is where their notable short-term rental performance. I mean, they've mentioned this quite a few times. So anyway, 4.37% total portfolio. This is why I just wasn't that impressed with ARK7 when I was just looking at their initial deals, right? Like, if you just bought everything at IPO and you bought their average portfolio, I mean, you're just not doing great. It's not terrible, but I wouldn't be very excited with that yield. And a lot of people, a lot of times people are comparing investing in some of these fractional real estate platforms to like CDs or high yield savings accounts. I don't think that's a very good comparison. Yes, you might be getting a similar rate of return, like 4%, 5%. Depending on where rates are. That's not a product I ever really invest in, so I don't know that much about it. But there are a couple of things that make it different. One, the tax rate that you pay on interest from a savings account versus the tax rate you pay on dividends from a property like this, depending on the way it's treated, is typically much different, right? I mean, you could have on some of the platforms, I'm getting cash flow but have no taxable income. Versus, if you're getting paid interest, you're just going to pay or at least I would, pay taxes on the full amount. Obviously, I'm not here to give you tax advice. You need to check that with your CPA. But the other thing, too, is to keep in mind, the yield is just one aspect of the return, right? Some of the platforms are going to have debt that is, being paid down over time. And so you're getting some amortization as a return. And then, most of them we should expect over the long run to get appreciation as well. I know a lot of people are like, well, I just ignore appreciation. That's just icing on the cake. I hear people say that all the time. And I think it's a terrible way to look at real estate. Cash flow is important, but over the last 20 years, I've made way more in appreciation than I have in cash flow. And that's with most of, my early properties were bought before the 2008 crash, right? Like I started buying properties in 2005. And so even some of those did better from appreciation than cash flow with a sale that was, on the other side of the crash, right? I don't know why. It was a real crash. There's no reason for the fingers on that one. I don't know there's been a lot of fake crashes since then, but that was a real one. So, but anyway, I think it's important to keep that in mind, right? Like they're just very different products. And yes, I want a current yield with these, and that's a big part of why I'm investing in real estate is I like the cash flow, but it's not the whole story, right? Okay. Anyway, jumping into my dividends, right? You can see this is my April returns, just a little bit because I don't have a ton of money on here, but 6.44% annualized. So almost, well, let's see, what was theirs? Yeah, more than 2 whole percentage points better than the average. You can see most of that performance is coming from these Atlanta C8 and C9, where my yield is 8% and 7.72%. This is because I bought them both at decent discounts, and so that's why those numbers look different than what's reported in there. You can see I do have some very low yielding ones. I bought the Austin S10. I bought Tampa S10, or Austin S2 and Tampa S10. Both of those extremely low yields. But what I'm doing differently on here, and where I think a big advantage of ARK7 is I'm buying these at a discount and getting a decent yield. And so more and more, I'm starting to think that if you can get the right discounts on ARK7, I prefer some of these to Mogul. Where for a long time I've been saying, oh, Mogul's my favorite platform. Well, a lot of those recent deals on there anyway, if I could buy all the deals, like all the early pad splits that I bought on there, yeah, I would just keep buying those, right? If I'm getting 10 to 12% yields on properties that I didn't think were overpaying on, that's really exciting, and I would keep doing that. But they've had a little bit of a decline. And so, if I'm going to get, here they're still beating these yields considerably, right? But my average yield on both platforms is about the same because of how poorly my short-term rentals are doing on there. But the other thing is, all of these I'm buying at what I believe is a significant discount to the real world value of these properties. I'm not just buying these, like especially the ones where if I'm buying them with a very low yield, it's because I believe I'm picking up a chunk of equity at this point in time. So I don't really care that I'm only getting 3% on this. If I think that when it sells, I'm going to get a 20% pop or some large percent like that, because I think we're getting a real good discount. And so that's why I've been willing to buy some of these. Yeah, and okay, you can actually see it right here, right? Like my return versus ARK7 as a total. This is why I think, if you're buying anything, I think it makes the most sense to buy on the secondary market. All the IPOs, there's very few of them that if you bought them, you'd be, doing too well on. And I wanted to point out, though, a couple of things with this that I think are pretty important. So, first of all, log me out. They are super quick to log you out relative to all the other platforms. But let's see. Let's look at... So one thing I thought this was really interesting, right, is, okay, this is all the money I've made on the platform so far. Only $67.72 is from rentals. Now, one of the things, they're not including any of these bonuses in my yield, so don't think that that's skewing that number. But I wanted to point this out in case people thought this was all referral rewards. I have received some of those, right? Some people are seeing the links in my video, clicking on them. And yeah, so three are from there. That's $90. But what was the total? Let me go back to there. The total's $380. So the other $290 has come from these dividend day rewards that I keep talking about. So like if you invest, this is why I'm putting money in around dividend day every month. If you invest $800 around that point in time, they give you $80, right? So that's like, I've done that a few times, and then they gave me $50 for hitting my first $1,000 investment. So I think that's important, right? Like I think these extra bonuses are a big driver of where returns are going to come from on some of these platforms right now. But that's why I was talking earlier on about like, okay, how much money is going through the platform? How big are they? Are they a reasonable going concern, right? All this extra money is like, it's basically marketing spend for ARK7, right? It's money that they're either giving up or spending, depending on how you want to look at it, in order to continue the growth of their platform. I don't think it's... I mean, obviously this can't last forever, right? I mean, there can't be a situation where I've made, okay, ignore the referral bonuses, I've made $290 on here, and I've only invested like, I don't know, $5,000 or something. Not a ton of money, right? So they're giving up a lot in that regard, and it's nice, it's good for me as an investor, but it does worry me like, okay, how long are they going to be able to afford to do that? They've also done on some of them like guaranteed income, which is basically a rent credit. Yeah, right now if I invest another $4,461, I'm going to get another $250 bonus. Like all of these, yes, it's nice to get it, but it's like, and I am taking advantage of it. Like my plan, and I don't know, this one pops up every once, it says 5 days remaining, but I've gotten this one with a short time remaining lots of different times, so I expect that it's going to keep hanging around. So basically what I've just been doing is every month just trying to take advantage of the $80 dividend day bonus. I don't know, like I did this month. I actually bought I bought some of this Berkeley M3, which again, very low yield, right? $4 or 4.52%. Not a great yield, but this is a, what is it, 5 or 6 unit? I don't remember because I looked at both of them. This is a 5-unit multifamily property in California, in Berkeley. It's in a location that I like, and I just know from experience that that's actually a decent yield for a small multifamily property in California. Like in this market where this is located, most of the investors that buy properties here, they're buying these properties more so for the appreciation that they expect than they are, for cash flow. Like if you bought this with a mortgage, you'd be losing money every month. You can see, and there's a pretty big, like, okay, a decent size NOI to where, even though it's a very expensive property, so it's a low yield, but there's significant cash flow. So I'm not worried about this property surviving in the long run, right? And so this is one where I think, okay, I'll get a small yield for maybe a short time, maybe a long time, depending on how long it has to be held. But I expect over the long run to make money on appreciation with this property. Now, is that guaranteed? No. Neither is cash flow, though, right? Like you've seen, I'm sure, if you've invested in some of these platforms, that the cash flow projections, or if you've just invested in real estate in general, it's not any more guaranteed than any other type of return from your investments. There's plenty of people that thought they were going to have huge cash flow on a deal. A couple of things go wrong, and all of a sudden they're not making money. So anyway, I put my money into this one this month. Got my bonus $80, and so this is one. I was really on the fence. It's not a great price. It wasn't. It's not a great yield. I really liked this property. But with the bonus $80 worth, which is like an additional 10% on top of what I bought, I was happy to get into this one. So I don't know. I think that's really everything I wanted to share about ARK7 for today. I shared the dividend stuff. Portfolio perform. Yeah. But I guess my whole, obviously I'm doing this just to let you know how I'm doing on ARK7. It is, there's not a ton of properties, right? It is a very small marketplace. If it continues to grow and we keep seeing these types of deals, it'll be really exciting. For now, it's sort of this little niche site, and yeah, I mean, I'm really excited. Like these two deals, I almost bought more of them, but both of them are more expensive than what I originally bought into them for, so they wouldn't have been quite as good of a yield. Sometimes that bias gets me, right? Like I'll be like, ooh, I bought this one for so cheap, I don't want to spend more than that on future ones. I think that's kind of silly, right? Like whenever we have capital to invest, we should just be thinking about what's the best deal I can find right now. And, if I wait, am I going to find a significantly better deal that'll be worth waiting for? And I think that that's not always the case, right? Especially when there's some free money involved in, okay, let me invest in something right now, right? So maybe I could have bought a little bit more of each of those and been happy, but I also really appreciate the, getting some more diversification. I don't own anything in Berkeley, California. Now I do. So that's exciting. I think that's it for me for today. Let me know if you've been buying on ARK7. What have you been buying? Are there hidden downsides that I have missed so far, right? That's one of the things every time I find a new platform, I'm sure there's things that are, either hidden risks, things I'm misunderstanding, all that. I mean, we've seen it over and over again. Please feel free to share that stuff with me. If you have a higher annualized return than mine on average, I'd love to hear about that too. But really just if you're beating ARK7 at all, let me know, right? Like I think hopefully everybody that watches this channel is a little bit more astute than the average investor on most of these platforms. And so if hopefully you're beating that average a little bit. If not, let's all work on that together. Anyway, until next time, I'm just going to keep making mistakes so that you don't have to.